Yeah, apologize that I have been all quiet on the Western Front. It's been a hell of a week at work. So go ahead looking at our pro forma balance scorecard. I've been playing around with this for the last couple hours trying to get everything set. We're not nearly where we want to be here, but we are in the positive in the most important thing, and that's going to be our stock price right here. We took a major dump from what we were at, and we're kind of getting slammed by everybody else. But I was able to play with the numbers to get us where we'll start having we're positive on that profit now, just by the skin of our teeth. I went ahead and killed the new product we were going to develop. There just wasn't a way for us to financially support it. I tweaked a few things here and there just to get us in the right place and keep our improvements. So I'll go over roughly what I did. So R&D, I went and killed it. Like, we want to do it, we'll be able to do it next round. We'll be improving our stock price from, we'll go to finance. This right here, we're sitting at 755. We'll have our earnings per share of 0.13. I could get it a little bit higher, but then we're hurting business at the end of the day. So now we'll have a positive earning per share. We'll increase our stock price. We should have, I know I'm not losing my mind here, where it tells me what it is going to estimate. There we go. Projected stock price here is based off all this EPS and what they need to know. The fact that we did a $37,000 emergency loan because we tanked so bad is what killed us, but we should shoot up to almost $19 a share, and then our book value hitting 20 had to help us out with market capitalization and all that good jazz. So to show you where we had the major, and this is what's killing us. Would be a lot better off, but we are paying a $37,000 emergency or $37 million emergency loan back. So yeah, the first round we almost went bankrupt, or we technically would have. So we'll be getting it. We'll be getting up. We're doing minimum on investments. I did a little bit. The only thing I changed. And this is to answer Nash's question. He asked me earlier, why don't we change some of the pricing on Baker and V? Those two are price sensitive. So if we change these, it drastically reduces. You shave you throw this to 50 cents, it's gonna pop it up. If we toss this up to 2050, it is price sensitive. This is our forecast. Won't change these numbers. These numbers will go up when we do that, but if we take it off, these benchmark predictions will go off, and that's based off of what my earlier video had stated. But I did use your question. I played with Bold and Buddy, and going back with what the competitors' numbers were. These two, yeah, we had some money to play with. Just taking this up $1.75, we were still lower than everyone else, and it did nothing to our benchmark. Again, this doesn't relate to what the competitors are doing, but it gives us an idea. So I think we'll still be set in where we need to be on that. Going over production, since we did have some money to burn, our labor cost per unit is high on these two items, and we're not running 100% on. Or we are going over base capacity on both of them, but to drive that cost down, I'm increasing the automation. We have decent automation on the two low cost labor cost and unit cost, but where we have no margin items, we have no our automation's way too low. So we're increasing that. It's a very small investment, but that's where that 7,200 investment's coming in. I think it's worth it in the long run because it should shave us down a basis point on each one. So, how I was saying, we need to apply this as much as we can going forward. Try to get these as high as possible if we can afford it, especially since we have rounds to go. The reason being is So if the labor cost per unit is $12, like it says, drives it down $1.20 per point. So this is taking $1.05 off each one. But I think it's worth our while to do it. Or the math isn't right on there, but I mean the gist of it's right. I could sit here and figure out the math what it's actually going to take off, but we'll assume $1. $1 is a safe bet on fair bet on what's going to take off each of that. Well, that goes straight to margin. So if we can do $1 for each one of these sales each round, we can drive our margin down and then try to get a competitive edge. Would like to see us do it on this too, but these are the ones that are in the most dire need. They have the highest cost, and we can chip away at margin. I would like to see us next round take one and one here. Unfortunately, we have no wiggle room, as we've seen with how bad we went. So making these changes, hopefully, it won't affect too much. Human resources, we need to make investments in here once we get our heads above water. As far as recruit and training spending, we're running lower productivity, and I think we run our contract expires 2022. I haven't dug into that as far as what that looks like, but what we have to do for that. So if we but we do need to be mindful that's in a couple rounds. I would like to see us start spending money here once we have the money to spend. That's it, man. Or guys and gals. As long as our math and everything we've done is held true, we should be good. We should be negative into positive. This is what's killing us. We just made big boo-boos first round, but it looks like we have them all under control. I'm issuing some long-term debt, and the other thing that's hurting us is this is all coming due here. So be mindful. The next round, we're not going to have this money to owe, and we're not going to have this money to owe, which is taking off of our bottom line. So we'll have some shares we'll have a lot more money to play with the next round. Just be mindful, every 2 years we're going to get hit, or 2 weeks we're going to get hit. So next week is our power week. If anybody has any questions, let me know. I think we got a pretty good setup here. I will try to be a little less busy. Had my corporate offices come down, and I got a legless employee, and I run the part of the business I run. We're like 70% veterans, and one of the only veteran managers, and they wanted to make a video. It's a big deal, and it was way more exhausting than it needed to be, but I should be 100% this week. And we're coming up on spring break, and I don't know how that's going to look for us as far as this class goes, but I would like to see us get ahead prior to that, and then should be smooth sailing. We shouldn't have any issue beating our counterparts out on this. We just need to make sure now that we're ahead and we're not in a negative, we start investing money where we need to invest it. We'll get the R&D done, and then tomorrow, after you guys watch this video, if you haven't already watched it tonight, because it's late as all get out, tomorrow I will dig into it right away. Probably tomorrow afternoon I'm off, and I will make sure that we are set for success, and we'll see how the results actually play out. Alright, well, try to be a little bit more communicative this week. Bye.